you. 3 o'clock, regular meeting of Senate Community Power. Good afternoon and welcome to the August 21st, 2025 regular meeting of Finance and Risk Management Committee. I'm Beatrice Yamani, Chair of the FRMC, representing the City of National City. We welcome members of the public, community power staff, and committee members joining us in person at the City of Chula Vista Council chambers. I now call the FRMC meeting to order. Ms. Sandra, please call the roll.
Director Insumsa.
Present.
Vice Chair Suzuki.
Here.
Chair Yamani.
Here.
We have a quorum, Madam Chair.
Thank you, Madam Secretary. Let's all stand up, please. Turn and face the flag to the Pledge of Allegiance. Ready, begin.
Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you. Thank you. Madam Secretary, are there any items to be added, withdrawn, or reordered on the agenda?
There are none, Madam Chair.
Thank you. Non-agenda public comment. Madam Secretary, we will now take up non-agenda public comments. Any written public comments submitted before the FRMC meeting were emailed to committee members prior to the meeting and will be posted on the website. Madam Secretary, do we have any non-agenda public comment?
Yes, we do, Madam Chair. We have two members of the public. Mitch Thompson, could you please approach the podium? You have 3 minutes to address the FRMC. The podium to your right. Thank you.
Yes, it works. Mitch Thompson, resident of Chula Vista. Let's see. I am on the board of directors of Neighborhood National Bank, but I'm really speaking as a citizen. The reason I got on the bank's board is it was created by the City County Reinvestment Task Force about 25 years ago because the public recognized that there was not enough banking services in low-income communities. And most of this, the west side of the South Bay and a lot of the southern part of the city of San Diego, had the need for further investment. You happen to have a lot of money. And where you invest, it makes a difference. So as a private citizen, and I've gotten 2 loans myself, so I am also a consumer of that bank as well. I can tell you that it's making a difference in small business and small property lending throughout the South Bay. And I think it is your public duty to find ways to reinvest in your community when you can. You have an investment policy. I don't know anything about it. Happy to see you all here. I think you can find a way to make a decent deposit with the bank and meet all of your investment criteria for getting decent return. And you will be more secured than you are with a credit rated bank. I worked for Bank of America for 10 years. It started as a subsidiary. I know a lot of stuff about finance and banking. So my comment is just find a way to get some damn deposit with that bank. You know, you're a public entity and you can get a double bottom line with it. You can still get your return and you can reinvest in the community so that we have the strongest economy we can have, so we got jobs. So that's my comment to you, and I thank you for your time.
Thank you, Mr. Thompson.
Andrews, can you please approach the podium? You have 3 minutes to address the FRMC.
Well, hi again, everybody. I'm Scott Andrews, President, CEO of Neighborhood National Bank, and just here, I think mostly to reaffirm our commitment to your ratepayers and to the markets you're serving. Our bank last year, I'm so proud to tell you that our bank last year, 95% of the loan dollars we funded were in low, moderate income communities, 95%. We are on that same track this year. We have a very, very robust loan pipeline right now. We have done a number of affordable housing loans this year, a number of SBA loans to small businesses. We are frankly in need of deposits in the form of liquidity in the form of deposits. When I look at San Diego Community Power, you have a $350 million plus reserve account. Not one penny of that is on deposit in San Diego County. as I understand it, it's in Sacramento and New York. And I would just, as Mitch said, you know, we're a bank doing good in the community. We're formed for the purpose of serving the community. And I would really encourage you as the finance committee to speak out on our behalf with full board. It's my understanding, with the exception of Vice Chair Suzuki, which I've not had the pleasure of speaking with directly, there's support from Chair Imani, Director Nzunza, former Chair John McCann, former member Paloma Aguirre, that we have support for this, and we're really seeking that deposit. Karen's been very cooperative. I understand there are policies and procedures in the way you have to go about a procurement. I just really want to encourage you to move this process forward, to help our bank, the only bank headquarters here in the South County, help our bank to grow and succeed and continue the work we're doing, supporting low moderate income communities, not only with loans. We do a lot of charitable giving. We do a lot of donations. We do a lot of financial literacy training. All of those things are helping, you know, support the community, particularly communities of color and in low income areas. So I thank you again for your time. I look forward to hearing from Karen and Dr. Washington on next steps for us to move forward. Thank you very much.
Thank you, Mr. Andrews. Thank you. I think I'm looking at my CEO and I'm sure that they will reach. Thank you so much. Moving on, we will now move to the consent calendar. Item number 1, approve June 12, 2025 meeting minutes. Do any of the committee members wish to pull the consent calendar item? Sandra, do we have any public comment on the consent calendar?
We do not, Madam Chair.
There any committee members, questions, or a motion on the consent? Item number 1. This is to approve the minutes for June 12. We didn't have our meeting last month because we were dark. So this is our minutes for June 12. So I will entertain a motion.
Second.
My members, thank you. Madam Vice. Madam Vice, I need a second.
Oh, I'm sorry, second. I thought he seconded it, so
Your
You made the
microphone.
motion, I seconded it.
Oh,
he
I'm
did
sorry.
second it.
Yeah.
Madam Vice, please turn on.
Are you trying to say I'm not loud
No,
enough?
I'm sorry. Sorry, I was.
That was me. Yes, go.
Yeah,
6 or 7 real quick.
Director Nzinza did second it.
Okay, thank you so much. I have a motion and a second, motion by, Vice Chair, see?
No, not Vice Chair.
You
He
are-
seconded it.
You made the motion.
You made the motion.
I did. Why am I like this? Madam Secretary, did I make the motion? I did. I made the motion. Councilmember Inzunza seconded it. Are there any comments?
There are none, Madam Chair.
There are no comments. Seeing none, please call the roll call.
Director Nzinza,
Yes.
Vice Chair Suzuki,
Aye.
Chair Yamani,
Aye.
motion carries.
Okay. We will now move to regular agenda items. Item number 2, Treasurer's Report for period ending May 31st, 2025. Director of Finance will present this. Mr. Mandiput, please. Sandra, do we have any public comments on this item?
There are none, Madam Chair.
There are no public comments. Director of Finance, it's your floor, sir.
Thank you, Chair. Good afternoon, Chair Yamani, Vice Chair Suzuki, and Director Nzinza. My name is Timothy Nanguma, Director of Finance for the record, and I have the pleasure of presenting the Treasury Report through May 31st, 2025, with a recommendation to receive and file. So through May 31st, 2025, results are somewhat favorable. We finished the results through May with a positive net position of 27.4 million. The budget projected that we would actually have a loss of $4.3 million at this time. So it's definitely very favorable results. Digging into a little bit of the details, on the revenue side, we saw some pretty favorable results in terms of uncollectibles being a little bit higher than what we expected. And then transitioning to the expense side, kind of the key driver there would be investment income, which we didn't budget, but due to the large amount of reserves that we had a pretty favorable investment income through investments through May. The other thing just to mention on the expense side is we did also realize some savings on energy. And a lot of that had to do with renewables and renewable prices coming a little bit lower than what we expected. Next slide. So taking a gigantic step back, through May of 2025, we finished the period with $319 million of cash on hand. Our reserve goal target, as a reminder, for the fiscal year is $575 million. So from a reserve policy perspective, we hit about 55% of our 180 days cash on hand target. We also do have a $250 million line of credit with JP Morgan. And when you add in the availability on that line of credit, we have about $532 million in liquidity available at San Diego Community Power. And just as a quick reminder, the agency also maintains no debt outstanding. And so we still remain in a pretty favorable position over here. Next slide. When you look at it from a year's perspective, kind of 12 months trailing, May 2025 is considered a trough for San Diego Community Power. When we set rates, we set our rates to mirror SDG&E's rate structure. So what happens then is through May of 2025, that'll kind of be the low period here in terms of cash for San Diego Community Power. And just as a reminder to the board, when the board adopted the budget for fiscal year 2025-2026, we did have a projection where we think that we'll hit our 180 days cash on hand target this fall. So what will happen is, and you'll kind of see the trend here in the chart, during the summer months is usually when we start to grow that cash reserve balance here a little bit. And so you'll see the top here in May, and I'll slowly start to increase here through the summer. And then hopefully we hit that 180 days cash on hand target, which we kind of showed in our projections in this budget. Next slide. And then the last slide, just kind of continue on to typical slides that we've shown in the past. In terms of participation by member jurisdiction, that's remained largely stable at 95.4%. And that's kind of stayed extremely stable over the course of the last year, where we haven't seen too many unenrollments here in the last year. So again, pretty stable. Next one. So with that, Madam Chair, that concludes my remarks. Thank you.
Thank you, Director. Are there any committee member comments on questions on item number 2? This is a receive and file item, by the way. Our recommendation would receive and file treasurer's report for period ending May 31st, 2025, if there are no other questions. So moving on to, thank you for that report. I think we're very, very healthy, and congratulations to us. We'll now go to item number 3, recommend board adoption of resolution number 2025-08, approving a second revision to Community Power's investment policy. Our Ms. Sandra, do we have any public comment on this item?
We do not, Madam Chair.
No. Our presenter here is our Senior Strategic Finance Manager, Mr. Spengler, and Dan Delaney, Chandler Asset Management, will present this item.
Thank you, Madam Chair and members of the committee. Yes, I'll be turning this over to, I'm sorry for the record, Jeff Spengler with San Diego Community Power, your Senior Strategic Finance Manager. I'll be turning this part of the presentation over to Daniel Delaney with Chandler Asset Management.
Afternoon, members of the committee. Pleasure to be here representing Chandler. We are your investment advisor, and with me, my colleague, Leanne Carabral. So we're going to talk about the investment policy, but this is really part of a broader move to optimize our investment program. We've been working with you, partnering with you for a year, and we've made great strides. Every year we review the investment policy. We want to make sure it's current with California code and industry best practices. The changes that we've put in place, the clarifications that we've put in place, will allow the agency to enhance their investments going forward. So we can flip to the next slide, please. So safety, liquidity, and return, these are the pillars that govern the investment policy and a standard of care as well. We are your fiduciary at the end of the day. So it's my job to ensure that the investment program is invested by these parameters and they run throughout the investment policy. So next slide. So one major change is adding local government investment pools. These are money market funds. These are stable NAV funds, dollar in, dollar out, but they provide another source of liquidity. And of course, you have a large investment program, and a big part of that needs to remain liquid. So think about this as an alternative to LAIF, or the local agency investment fund, which is run by the state. There are times where some of these local government investment pools, and there are many that are privately run, will offer better opportunities than this. You want to make sure that you have that in your toolkit, you can invest appropriately. So that is one addition. The next slide. The next two updates, really clarifications, are to investments where you have large exposures in your current portfolio. One is deposit in the bank, collateralized deposits, where we've just had a clarification that under California code, there is no limits to those investments. And the second is a placement service deposit that you have through River City Bank. Again, that's a very large exposure that you have. And we've just added some clarification regarding rules that were recently changed in California code, which do affect your holdings there, essentially extending the provisions allowed to 50% of your portfolio to be invested in that in 2031. You currently have around 40%. So you're well within that parameter. But again, these are just clarification items. I think that more transparency is a good thing, so that's what we're trying to do. And I think that's it for me. I'm happy to answer any questions about the investment program and the market policy.
I'm just going to add, Dan and Mia and the rest of the Chandler team have been instrumental in helping us kind of update our policies based on California code. They've been great partners to us over the last year, or for my last 5 months here at the organization. We've relied on them quite a bit, so it's been a pleasure to work with you. Thank you.
Thank you, Mr. Delaney. Thank you for that presentation. Members, do you have any comments or questions with regards to the presentation? No, Councilmember?
Motion to adopt the resolution.
Second.
I have a question. There's a motion to adopt and a seconded. So this, Mr. Delaney, if you can answer that, or Mr. Spangler. So this LGIP
Yes,
will be an added
authorized investment.
from the pool that we already have.
From the allowable pools that we have,
Allowable.
and that is really the state pool, the local agency investment fund, LAIF.
Well, I was just reading quickly when you were, making a presentation. So this is a state-sponsored, overseen by the state treasurer. What's the status of this? Are they solid? Foundation is solid. The return is good. I just wanted to get that from you.
So LAIF is the state-run pool. It's a very well-run pool.
Yes.
What we are recommending that you add is the allowance to invest in other pools which are not state-run. They're run by private institutions. They're very well run. They're stable NAV funds, which means that if you put $1 in, you can pull $1 out. They can offer better opportunities for yield or return, depending on where we are in the economy, where we are in the interest rate cycle. So it's really another option for you. And if you look at other investment policies for cities, for other CCAs, they will have this allowance to invest in other pools. So
I see that in my city of National City, and I understand Chandler is also the management entity for the city of National City. Okay, so when this is adopted, that's when our executive, our CEO will put it to motion, is that correct? Director Tim or Director Spangler? So once this is adopted, when will this go into effectivity? When will it be effective?
I believe as soon as the board adopts the policy, it'll be in place.
So,
within
okay,
our
so
negotiations.
we are recommending approval to the board. Okay, recommending. Okay, thank you so much, Mr.
You're welcome.
Delaney. There is a motion and a second. Ms. Sandra, please call the roll.
Director Insulza,
Yes.
Vice Chair Suzuki,
Aye.
Chair Yamani.
Aye.
Motion passes.
Thank you. We'll now go to item number 4, recommend board adoption of resolution number 2025-0-09, approving a disposal of surplus property policy. Director McNichol, please. Oh, do we have any public comment on this item, Madam Secretary?
We do not, Madam Chair.
Okay, thank you. Director Tim, you should report.
Good afternoon again, Chair Yamani, Board of Directors. Timothy Nagamot, Director of Finance, for the record. I have the pleasure again of presenting the disposal of surplus property policy with a recommendation to recommend board approval of the associated resolution. So just by way of background, our General Counsel, Vera Tiagi, has been leading an internal effort to identify policies within the agency and just policy gaps where there might be some associated portions of policies that might be missing. One policy in particular is this disposal of surplus property, where most agencies, including your own member jurisdictions, already have existing policies. San Diego Community Power does not have an existing policy for disposing of property. And so just by way of example, we have computers in the office that we just can't get rid of without having a policy like this in place. Next slide. So the policy in front of you has a framework whereby any property above $25,000 must get the approval by the board to authorize disposal of such property. The policy also outlines anything between $500 to $25,000 can be disposed of with CEO approval, with the caveat that CEO must report back to the board the property that's disposed of under that threshold. And then anything under $500 is considered de minimis and can be disposed of without any kind of formal process. Next slide. So getting into a little bit more details on the policy. So we do have some proposed disposal methods, but the policy isn't limited to these. So auction, direct donation, recycling, or regular waste. And should such property be disposed of, and should there be proceeds from any of the disposal, any proceeds will be directed into the operating budget, besides additional cash that's added to our cash balance. Next. And so with that said, Terry Yamani, another the fast one, this is again a recommendation to the board to adopt the resolution to approve the disposal of surplus property policy.
I move to recommend.
Thank you. There is a motion to recommend to adopt resolution number 2025-09, approving a disposal of surplus property policy. I will entertain a second.
Second.
Thank you. I have a motion and a second. This is a good, spring cleaning, right?
Literally.
We need that policy. Thank you so much. Madam Secretary, can you call the roll, please?
Director Insulza,
Yes.
Vice Chair Suzuki,
Aye.
Chair Yamani.
Aye.
Motion carries.
Thank you so much, Madam Secretary. Moving on to item number 5, recommend board adoption of resolution number 2025-10, requesting CalPERS to authorize the division vote of community power employees to participate in Social Security, and upon receiving authorization, authorize community power to conduct the division vote. Director Tim, it's your floor, but before that, Madam Secretary, do we have any public comment on this item?
We do not, Madam Chair.
It's not, okay. Director Tim, it's your turn.
Thank you, Chair Yamani. Once again, for the record, Timothy Nagamot, Director of Finance. And I will be joined online by Shanta Pugh, Senior Director of People Operations and Administration. Long title. So again, this is a little recommendation for the FRMC to recommend board adoption of the associated resolution to authorize a vote within the agency to enroll in Social Security. So just by way of background, San Diego Community Power has always intended to contribute to Social Security. Since our inception, we've been collecting Social Security and contributing to it. And just also by way of background, back earlier this year, it came to the agency's attention that in order to properly contribute to Social Security, local government agencies such as San Diego Community Power, who have a defined benefit contribution over 7.5%, must file what's called a Section 218 agreement to officially enroll in Social Security. So this was identified as a gap, and working with our general counsel, Vir Tyagi, was identified as a thing that we wanted to fix, kind of through this resolution and through this filing of a Section 218 agreement. Next slide. So in terms of kind of putting together a fix for the Section 218 agreement, there's kind of a 3-step process that must happen. Step number 1 is the action that we're recommending to the board next week, which is to adopt a resolution to approve a vote within San Diego Community Power. So within step number 1, what will happen is if the board approves the resolution, CalPERS, who administers the Social Security program on behalf of California, will give the employees within San Diego Community Power a 90-day notice of a vote. That vote will occur, and then what will need to happen after that, assuming the vote is successful, it will have to come back to the board as a 3rd step to authorize official enrollment into Social Security, the filing of the Section 218 agreement. So with that said, Chair Yamani, that concludes the presentation. It's a pretty fast one, but again, the intention is for us to enroll in Social Security and just continue the investment that our staff and the agency has made to make sure that we can open up the official enrollment. And with that, Chair Yamani, I'll turn it back over to you. Thanks.
Thank you so much. That's wonderful. Are there any committee members' comments or questions on motion or a motion on item number 5? To recommend board adoption of resolution number 2025-10, requesting CalPERS to authorize the division vote of Community Power employees to participate in Social Security and for Community Power to conduct the division vote upon receiving said authorization. I will entertain a motion, please.
I move to adopt resolution number 2025-10, requesting CalPERS.
There. I have a motion and a second
Second.
by Councilmember Insunza. Madam Secretary, please call the roll.
Director Insunza,
Yes.
Vice Chair Suzuki,
Aye.
Chair Yamani.
Aye.
Motion carries.
Thank you. We'll now go to item number 6, update on results from clean prepayment transaction number 2. Senior Strategic Finance Manager will present this item. Mr. Spangler, before that, Madam Secretary, do we have any public comment on this?
Do not, Madam Chair.
Not. Mr. Spangler, it's your turn.
Thank you, Madam Chair and members of the committee. Jeb Spangler, Senior Strategic Finance Manager with San Diego Community Power. Just by way of background, I had presented the upcoming, at the time, prepaid transaction to the FRMC and the board in July of this year. I believe I also held board member workshops on this throughout the month, which I think all 3 of you actually participated in, so thank you. So this is more of a just an update on the results of the transaction that did finally occur after a little bit of a delay. Just by way of background, the ultimate goal of these clean energy prepaid transactions is to reduce the cost of our power purchases by about 8% or more if possible. And how we do that is through the use of selling tax-exempt bonds. And ultimately, our savings come in the form of selling tax-exempt bonds at a lower rate than what the ultimate recipient of the funds receives, what the ultimate recipient of these funds pay for their cost of capital, which is a taxable rate. So it's a tax-exempt or taxable ratio difference. These have been around for a long time. There've been over 100 of these transactions sold across the US. The majority of them have been for natural gas type transactions. Here in California, there have now been 21 clean energy transactions for CCAs. And as just a reminder, we sold our first transaction in November of 2024, and this most recent one occurred in 2025, July of 2025. Next slide, please. This is a list of the 21 transactions that have occurred in California since 2021. Ours being the most recent in July. There's a little gap there for Ava Community Energy. They actually received approval before ours, but ended up not being able to sell bonds. They're still, as last I checked yesterday, they have not sold bonds, but they have posted their preliminary offering document for investors, which means they are probably very close. And they've actually authorized an additional transaction following this one. So they should be in the market twice pretty quickly. Next slide, please. Just by way of reminder, the board authorized staff to execute this prepaid transaction, assuming certain execution parameters were met. These bonds had to not exceed 1.5 billion in total size. A minimum savings or discount of at least 8% or more needed to be achieved. Total issuance costs could not exceed 1% of the par amount. And importantly, the bonds were not obligations of Community Power. The issuer of the bonds was California Community Choice Financing Authority, or CCFA for short. Happy to announce that all 4 of these parameters were successfully met. Next slide. This is a snapshot of the ultimate savings. We were just over 1.005 billion in a total transaction size. The municipal bond rating was an A2 by Moody's. Just important to note that this was not the actual credit rating of San Diego Community Power. This is the credit rating that was associated with the funding recipient in the transaction, which you may recall is who receives the proceeds of these bonds. We were rated by an organization called Kestrel. Kestrel does a certification, which is called a green bond certification. So these bonds were sold as certified green bonds. And what this does is it attracts a certain investor audience that looks for green type investments. There's a number of portfolios that are exclusively ESG related that look for specific transactions that are beneficial for the environment, social reasons, et cetera. And just important to note that we were scored 5 out of 5, which is the top 1% of all electric utility bonds in the sector, which is pretty phenomenal. These bonds were priced to an initial period of July 1, 2034. So we will need to reprice these bonds at a new discount in 2034. The final actual bond maturity date is October 1, 2055. And then the punchline of all this is we were able to save San Diego Community Power $6.1 million average annually between now and 2030. I think that's the good news that I'm happy to share. These savings will actually start in September of, which is next month, in a couple of weeks. We will start receiving power from this transaction next week. We are already receiving savings from the first transaction, so these will be new savings on top of the transaction we sold in 2024. Next slide. These are the savings layered on top of each other. The blue bars being the savings from the 2024 transaction. The orange bars being the new savings from the 2025 transaction. As you see, savings increase over time up to almost 16 million by 2030, which is a significant savings for Community Power and their customers. Next slide. We did have a nice press release, which I hope you all saw. And this was also picked up by American Public Power Association, which sends out a daily newsletter to thousands and thousands of electric utility participants across the country. So good news coming from the San Diego region and our ability to address affordability by lowering energy costs. With that, that concludes my presentation. Happy to answer any questions.
Thank you so much, Mr. Spengler. Committee members, do you have any questions, comments on this item? This is a receive and file, by the way. So we recommend this item to be received and filed, the update for the Clean Energy Prepayment Bond Finance Initiative. Thank you, Mr. Spengler. That was quick, no? You know, when you presented it in June, Because we
Either
had.
June or
that
July, yes.
June, we didn't have meeting July, we had.
Oh, it was June, you're right, yes.
Understood it better. Look. Right? Thank you.
And-
Thank you, CEO. Thank you. Thank you so much. We now go to members of the committee, any announcements, any good news, bad news, good, bad, ugly? Anything that you wanted to share to the public? But I don't have any other committee announcements. Otherwise, this brings us to the end of our agenda. I appreciate everyone's participation today. The next regular FRMC meeting will be held on Thursday, September 18, 2025 at 3 p.m. So we are adjourned. Thank you so much. Didn't sound.